Ever wonder what real forex trading looks like without the fluff? No filters, no fake wins, just raw progress, painful losses. Let's break it all down here. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. There is no hiding anything, there is no pretending, there is no extra editing, there's no fini family. It's just seeing the real raw experience, seeing your trades go straight into profit, seeing your trades go into profit and then go back to entry and stop loss, seeing your trades go straight into stop loss. That is what this channel is all about. Recently I had taken some serious L's, like really L's. You can see that the balance has really dropped a lot. It was at 97 something, but now it's back to 94. And well, we took the cute L here, the Canadian dollar to the Swiss franc, and I just want to show you straight up on my journal what that trade was all about. So that trade was it was a perfect trade, honestly speaking. I mean, I took it on my phone. It was a weekly concept, a weekly view, and I noticed the high wasn't taken yet, so I expected price to come down and push up. And this was my 4 hours expectation. Right here you can see it. I found the first ST around here, but I didn't take it because this was not like a clear sharp turn. But this particular week right here is literally a sharp turn, but not on the 4 hours, right? So I had to wait for the 4 hours sharp turn, and right here I could see my 4 hour sharp turn. Well, I jumped into this trade after that 4 hour sharp turn, but guess what? I got knifed in the middle of the night, like around past 8 or so. So you can see it right here on the chart, this particular candle right here at 9 o'clock yesterday, at 30th 9 p.m. I just saw one very devastating candle come in, tell me get out of this market immediately. Like, took me out, threw me away from the market. And well, it seems like I would say the market is making a U-turn, if I should say. Well, that is not the big issue. The big issue is this. The big issue is I am now having serious conflict of strategy interest. So on Euro USD, I entered a trade quite based off of MMC, but also based off of trend lines. And if you look here, you see on the monthly, I'm looking at the monthly fair value gap. I'm expecting price, from looking at the fact that price has actually changed from the trend line perspective, price has changed momentum to bullish. I'm expecting price to find its way all the way to the monthly. And even on my own personal strategy, just let me highlight this, you'd see that on my personal strategy, it seems like price is actually heading towards for the monthly fair value gap. How do we confirm this? Well, on the monthly like this is what we're seeing. For us to be thoughtful that price is heading back for this monthly fair value gap, we can jump into the weekly, the daily. Now on the daily, this is what tells us price is probably going back for that fair value gap. You can see the fair value gap in, the fair value gap out. So fair value gap down, fair value gap up, just for you guys to see it clearly. This right here is the fair value gap I'm talking about right here. And so this is the fair value gap in and the fair value gap out. So we see price do what it is supposed to do, right? What it's supposed to do is go up, come down, and then start to run for the other angle, which you can see with these trend lines. You see this particular up move broke the trend line, and then price has started moving funny, go up, come down. Now price is coming to mitigate the daily fair value gap. Now this is like a serious determinant point. If price should go beyond this point, then hell, we all know it really means like this is the lowest point we expect price to ever mitigate. It shouldn't even come here, but if it should come here and cross this point, we are just aware that price is running more for more bearish movement. And this is all thanks to Donald Trump and his trumping. He's good at blowing his trumpets. He's making the economy shake, and everything is looking very, very not so straightforward. So in this case, I'd say for me, I entered this trade with a mixture of two premises, right? I entered this trade with the premise of the MMC. The MMC's premise is I saw price coming back for this daily fair value gap, right? And being that the market is more bearish than bullish over the higher time frame, I did this. So on the daily, I have this daily fair value gap, and if I go into the 1 hour, I saw that severe break of market structure, which is something that is very, very strong. Like, saw that price go up, come down, and I saw that fair value gap in, fair value gap out scenario right here. Right here, fair value gap in, fair value gap out, and also so this fair value gap in, fair value gap out scenario right here, and that whole thing pushed price past a resistance point. Now if price goes past a resistance point with this amount of momentum, you can see price has not found its way, like in fact it's not heading any way back up, which is where my stop loss is. But then again, this is something you need to also observe. So price did come up, came within this zone and went down. So what does that actually construct for me in my head? That constructs intermittent term lows, intermittent term highs, in my opinion. I'll show you what I mean. So intermittent term high, intermittent term low, intermittent term high. We are no longer respecting this, so we expected price to come down and go back up, but instead price did this, went down, went up. You can see giving us this level and instantly running away from it. So if we're expecting a pullback, we're expecting a slight pullback at any point in time towards this arena, and then we'll see another fall. That's what I personally am expecting from the Euro USD market. But up until then, let me show you how I tend to determine structure of market quickly. I like to use the zigzag tool, and the more you reduce this, the more you can start to see all of the things I see in the market. You see, I take this to, let's say, 0.5. You see the exact thing I just drew? This is how I get my structure on the market. I hardly use the path 2. You can see I added the path 2 in this video, but I hardly use the path 2. I just use the zigzag indicator. It shows me the entire ups and downs, intermittent term highs, intermittent term lows, and everything I need to know. So this is for the Euro USD trade I'm currently in. I'm shorting it all the way to 1.03 euro. Let's see if that will work. Then the next trade I am currently in is the British pound Japanese yen. Now remember, I'm supposed to work with a weekly premise. Now another reason why I went for that old trade with Trendlines Association is because, so my daily structures, I don't really trust my daily structures anymore because I have a 75% loss rate on that place. So I decided to start incorporating an extra holding, like something to tell me, okay, it's valid to take this trade, right? Now, if you can look right here, you see this daily trend line going down. Pure, it shows us everything we need to know about the current daily trend. But on the 1 hour, you can see I have two trend lines here. One starting from this low, but one starting from the lowest point of where price has gotten to in the period of time. And you can see both structure, when price broke this first structure and went below my trend line, right? This first trend line, I instantly said, well, let's take a sell, right? Let's take a sell aiming for this other trend line, and then we'll watch out how price behaves around this trend line. And then I saw price, you can see where I entered the market right here, and then I saw price did what? Run straight through my trend line. I said, all right, fine, let's just let it run then. Let's let it run and run all the way to £1 and 3 pennies. Let's see how much it goes. If it goes that much, then not just in luck. It's kind of analysis, but it's more of luck also. Now for the British pounds Japanese yen, this trade is purely MMC, right? Purely MMC. My weekly fair value gap, as you can see, the premise is right here, weekly fair value gap. I see a bearish weekly fair value gap and price was coming into it. You can see right here, I already wrote like an instruction for myself. 4 hours bearish ST or 1 hour bearish order flow. That was what I was waiting for. So on the 4 hours, I saw my ST, right? Sharp turn, price up in, price out. Well, I'm waiting for more confirmation. I kind of have this premise that I want more confirmation these days. So I waited for a slight order flow in the bearish direction on the 4 hours, and right here we can see a clear show of order flow on the 4 hours mark. So when I saw this fair value gap, I dived into the trade and said, all right, fine, let's head for this end. But I'm actually going to stop somewhere around here for now, and if I see price moving properly, then I'll take it all the way to this end like this. But for now, let's just keep it where it is and wait for the market to open. These are the two trades I'm currently working in. You can see I now mix trend lines with MMC, and I hope it works well for me. I didn't mix it in the other one. So I noticed a big mistake here. The big mistake is, so on the monthly, right? On the monthly, there is this very, very devastating fair value gap right here, right? This is a monthly fair value gap. And this monthly fair value gap is the higher time frame premise, and it's the most outstanding premise. But with this, I have a initial lot. This is like the first monthly lot, right? The first monthly last line of defense, and I expect this to be mitigated because price did not push away from it clearly. So let's see, did price push away? Yes, so price pushed away clearly. Price pushed away clearly from here. Do I have a clean bearish order flow? If this is the weekly, on the daily, you can see on the daily I'm having ST already. I'm having a good ST. So it means I'm not supposed to long these markets, but this was the mistake I made. So on the daily, I was following a daily premise, right? I was following the daily premise, as you can see right here. You can see that I was following a weekly, monthly. Okay, I was following a weekly premise. So let's look at the weekly premise. The weekly premise here is, oh, now I can see my arrow. So this is the weekly premise. This was the premise I was going with. Yeah, right there. This was it. And I was aiming for a 4 hours bounce off from here, which is what I saw right here. You can see this whole place right here. This was what I saw, which was wrong analysis. The right analysis was to start from the monthly, and I would have spotted that this market is more of a bearish market than the bullish market. The bullish move was just a facade. But nevertheless, there are still trades to be made. The ARL is still far. I know you've never heard me say ARL before, but it's a external range liquidity. The monthly external range liquidity, or rather the liquidity expectation point for the monthly, is still far off. So let's just let that run. So in this market, I'll be waiting for just one thing, right? And I guess you should know what it is. It should be, simply put, I'll put it right here. I think a lot of you guys already know exactly what I'll be waiting for. So I'll be waiting for a daily FEG. Basically, that's all I'm waiting for. Daily bearish FEG, or we're just going to be waiting for a 4 hours order flow. So we're waiting for one of those two things to happen, and we will dive into a sell. Dive into a shorting trade. So the 4 hours, you can see I have not found like clear bearish order flow, though this was like an order flow. So it's like an order flow, but it looked more like a turtle soup to me, but it was not. You see, it was just like 1 pip away from the stop, so I won't take it. I'll wait for a clear 4 hour order flow. That is 2 consecutive fair value gap for going downwards, where the STs, the short-term highs are not taken out. So what I mean by short-term highs, this right here, my brothers and sisters, are short-term highs. They are highs that lead to fair value gap. You can see this is another one, but this is not the right one because there was a weekend break. So this is the highs, And you can see all short-term highs. This is also a short-term high though it's an intermittent high, but it's also a short-term high. This is another one. So we can see short-term highs holding, leading to more bearish fair value gap. I just need another 4 hours short-term high to pop up on my screen and I'll say yep. But if I'm working with a 4 hours premise, we're not going to target the monthly, absolutely not. But if it's a daily, if I can find a daily, premise, order flow, right, fair value gap below, poof, we're going to be killing for points like this, and then last but not least, points like this. So these are like 3 main points before we finally head for this, if we are going to head for this. So people, I hope you enjoyed this short video analysis and also talk about my recent mistakes, recent errors, recent mistakes, recent difficulties, but also experience and knowledge. We've been doing this for a month and 17 days, people, and we are hoping to do this for a bit longer. Just one more day before you know we'll be a year gone and just like that. But nevertheless, thank you all for watching and catch you on the next analysis, probably tomorrow, definitely tomorrow. So catch you all on that one.